Here's a question coming in from Sahil Makkar. He says there is a lot of confusion around whether the TDS for mutual funds is on dividend income or capital gains. Please clarify. In fact, I was reading just today that even AMFI is seeking some kind of a suggestion, but most mutual fund houses seem to believe right now that it is on dividend income, the TDS, and not on capital gains.
Right.
Is there some clarity that you have?
Well, my view is that if you look at the way the Act has been worded, they've very clearly said any income derived, from a mutual fund or so on and so forth. So they've said any income derived. They've not said any receipts, right? And usually in the context of the Income Tax Act, an income is very different from a capital receipt, right? Sure. They would have specified that any capital receipts from a dividend from a mutual fund, and they would have advised certain tax rules, but they've just stuck to, they've gone into the TDS section, and TDS deduction is usually on incomes. Of course, we also deduct TDS, when there's a property sale that happens. So the buyer deducts TDS before making a payment, but that's different ball game altogether. In my view, this is only a dividend income because of the wording in the Act, which says any income derived from such and such source.
Also, let's talk a little about the whole dividend distribution tax piece, because that's got a lot of attention.
Right.
And I see, at least on my Twitter timeline or Facebook, a lot of people very, very upset, especially those in the higher tax bracket, because I think from what has happened is, and you can explain that better, is that where earlier a company was deducting it and giving it to you, now it's taxable in your own hands.
Right.
And will be taxed at the tax slab that you're at. So
Correct.
if you are in the 30% plus tax, I think it adds up to almost 42.7%. Is that right?
Right. I'll just give a sort of a backdrop to this. The whole, concept behind DDT is that when a company is paying you dividends, it's already paying that dividend from a post-tax profit. So the company is only allowed to declare dividends from a post-tax profit. So those profits have already suffered taxes at one instance. Now, when the distribution is being made to you, again, the company used to deduct DDT, deposit that DDT with the government and pay you dividends net of taxes. Now, say I am somebody who is in the 5% or the 10% or the 20% tax slab. I receive these dividends net of DDT, and that is somewhere in the range of 20%, the DDT rate. So my dividends have suffered taxes at a higher rate than what my tax slab is, right? So that was unfair, to a small taxpayer, because their total income is in any case subject to lower tax rates. Now, when the DDT has gone away, it means that you may tend to receive slightly higher dividends because they will not be subject to the 20% or so rate of DDT. But the moment you receive it is when that you will add it to your total taxable income and pay tax according to your tax slabs. Now, if you are, in the 30% bracket, 20% bracket, then you will pay slightly higher taxes. But if you're in the lower tax bracket, then you will pay lower taxes on it. And the stuff around 42.74%, that's only applicable to high net worth individuals, when your surcharge crosses 30%, 40% when you're crossing the 2 crore threshold. For them, it's become worse, actually quite bad. Because earlier, their dividends were only taxable if they exceeded 10 lakhs. Right? And the excess was taxed at 10%. So they were given this benefit that your dividend income will be taxed only if it exceeds 10 lakhs and also at a nominal rate, 10%. But now if they are in that highest income bracket, they will face that 42% tax on
it. And this 10 lakh limit has been removed for everybody or only for the higher income categories?
Well, actually, they haven't really changed that section yet. Okay. But I think it's a procedural issue. It will come through.
So even if I'm getting, say, 5,000 rupee dividend income or 10,000 rupee dividend income, I'll be taxed on it.
Right.
In my hands.
Correct. So what they've said is that, whatever dividend income you are receiving, if it exceeds rupees 5,000, the company will deduct TDS.
Okay.
Right? That's the mutual fund. But if you're receiving dividend from equity investments, your direct equity investments, of course, there's no TDS. It could be 100 rupees, 10,000, whatever it is. You're supposed to add it to your total income and pay tax according to your slabs.